Hey everybody, it's Greg Gossett from Gossett Trading and Mentoring Live, and thank you so much for tuning in. Today is Monday, April 15th, and we are in the last hour of the market. So, looks like the Dow Jones is down 33.48. The Nasdaq's down 9.6 and the S&P is down 2.75. So it looks like we have slightly down day across the board. We'll be getting into positions and then possible setups for today. But before we start, let's take care of the legal disclaimer and get that out of the way. So hold tight.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
Okay, so we got that taken care of. So first thing we're going to do is we're going to take a look at my current positions. So all right, so we have IWM, which is the Russell 2000. I bought this here on the 11th of April. The day before is really where I wanted to buy it, but at the last minute of the market, I forgot to buy it. So, but I bought this when I bought it here, but I wanted to buy it here when it closed below the 200 and then back over the 200. And what I really liked about this is I like when we have a higher low going into that 200. A lot of times that first break above seems to fail. And the reason why is we had this big dip down here. People that bought here probably sold here. Then we came back down. And now all the people that bought here that sold here, they're out of the equation. So that's why I like higher lows, because you have people that are, people that bought here, sold here, it went down, but was still strong enough to come back. So the sellers that bought here exited, got rid of the sellers, and usually makes an easier way to go up because you don't have all that selling pressure. So, today it's down. I bought it right here at this dotted green line. I phased out of about 12% here. I don't like that it hasn't kept moving up. It's made a lower high, a lower low. It is hanging right there on that 5-day moving average. So I think if it closes below that 5-day moving average, I'm going to just get out of that position, lock in a small profit from what I phased out from here to here, but we'll see what happens. Another way would be a close under the previous day's low. That coincides pretty close with that 5-day, so I'm just going to watch that one and we'll see what happens. But I'm definitely not going to let it come back down all the way down to here. Coca-Cola. Let's take a look at Coke here. So I bought Coke on the 9th of April right here. Again, when we had a higher low close above the 200-day moving average. It was a nice clean break. Took out that previous high in this little previous range, as well as the 50-day. I've phased out probably about 30% since my entry, and you can see I hit one of my profit targets here. Have another profit target up here at 47.14. So if it can get out, if it can go up there today, I'll be getting out of that as well. I always like to phase when the market gives me when the market goes my way. You have to play offense and defense, and the defense is keeping your stop tight if it goes against you, making sure that you have a small loss. That's what you always want to keep in mind. You always want to limit yourself to a small loss, but be open-minded, let your profits run. But at the same time, the offense part is I like to scale out as it moves in my favor. Not all, but some. I think I phased out of about 12% here today. If it gets up here, I'll phase out of another 12%. But this looks fine. It's above the 200-day moving average. MACD is positive. RSI is not overbought. So we'll see what happens here. But right now, Coca-Cola looks good, and it's definitely been a profitable trade. Lockheed Martin I bought on the 11th of April, right here at 305.38. I phased out partially as it moved up in my favor, as I always do. Today did go higher, but immediately reversed. Gonna have to see what happens with this. As a general rule, when I have kind of these big momentum bars, if I close less than halfway of this movement here, of this bar here halfway, that's a little bit of a red flag for me. But as it is now, where it's standing now, I definitely gonna keep this. Tomorrow, if it closed below this previous day's low, I might consider that. I might just use the 5-day as my closing stop. So be determined. We'll see what happens here. But as of right now, going to keep it. We do have earnings coming up on the 23rd. So regardless of what happens, I'll exit the position before earnings. I never like to hold through earnings. It's just a gamble. So anyway, we'll keep Lockheed Martin right now. Nike I bought on the 12th of April, right here at 86.26. That was Friday when we broke above this previous range. RSI was not overbought. We had some volume. MACD went positive, so this one's worked out well. I took about a 12% profit there as well. So this one looks good. You can see how the moving averages were moving together. Now they fanned out. That's always a good sign. But again, MACD's positive over 50. RSI is positive over 50. I entered on the day when we had some volume. MACD has gone positive. We moved up over all these moving averages and took out this previous high. That's called a fractal. Bill Williams, you can look that up on YouTube. But generally, but a fractal is when you have one bar with the last two prior bars below and the last two prior bars below. And it did take that out, which is just considered a breakout, but it's added a little benefit when you actually have a legitimate fractal. So that one has moved my way as well. Tomorrow, if we were to take out the low of this bar here, I might consider just locking it in, or I might consider down to the 5. So I just have to see what the price action is on that particular day. So we'll see. Okay. SPY. Just give me 1 second. I gotta check something over here. Let's take a look here. All right. Let me show you a picture here. This is from Steve Burns from New Trader U. He shared this on his Twitter feed, and I found it interesting. This is from Bespoke Invest. Since 1993, if you would have bought SPY on the open, so you buy it on the open and sell it on the close each day, this is from 1993, you would have returned a negative 5.2%. Think about that. So what does that mean? We know the stock market's gone up since then, right? So what that means is, well, I'll read the rest. But if you did the opposite and bought on the close and sold on the open, you would have returned 568%, meaning all performance came in after hours trading. Isn't that fascinating? People bid up the price after hours. So I was fascinated with this, and for the past, I think, 33 days now, I have decided to test this out. It's a long-term test. I've only done it for 33 trading days, but it has certainly been profitable in my experience. I mean, for example, you would have bought here, sold here for a pretty good gain. Bought here, sold there for a slight gain. Bought here, sold there for a nice gain. Here you would have bought here, sold here, you would have had a loss, and you can see, was that Thursday I bought here, sold here. Friday I got a little better price and sold there. So, it was a profitable, it's certainly been profitable. I can tell you that. I've kept perfect records on it. So pretty interesting. So it's amazing, right? 568%. It all came in after hours. So I will be buying that again at the last, at the close of the market, and then selling it tomorrow morning. But you can see it certainly has had drawdowns. It's not that it goes straight up. So you have to keep that in mind and always position size correctly. I generally take a 10% position size of my entire capital. So you can't just go and bet the farm, because it does have pretty significant drawdowns. But over time, it certainly has been profitable, and it's a nice, it's a nice, easy method too. So, my experience so far, it's worked. So let's see what happens. Okay, so that's what we have. Just a real quick recap. IWM, if it closes below that 5-day, I'm definitely going to just go ahead and take that off. Coca-Cola's moving up nicely. No danger there unless it reverses. Lockheed Martin is holding that halfway point, which I like, so I'm going to keep that. Nike's doing well, phased out, and SPY, we'll take a look at that at the end of the day. So, all right. Let's take a look here. So let's take a look at, see if we have any setups for today. Okay. So Apple, I don't think I'm interested in buying Apple. It did have a nice bounce off this 10-day. It did create a V2, and remember, a V2 is when if it's a 3-bar combination, is when you have one bar, you have the next bar that washes out, goes below, but reverses and goes above the previous day's close. So if this bar would have closed above this, it would be called a V1, but it didn't. But now this bar today makes it a V2. So, that is a signal, a V2 signal to enter. But in the context of this chart, we're at 70.94. MACD's gone negative. MACD is the momentum. So the momentum has kind of stalled. So nothing I would be interested in right now on Apple. So, maybe if we got back down here, back into the value zone. The value zone is what is one standard deviation away from the 20-day moving average, above and below. Right down here is someplace I like to look for entries, but it's too high for me now. I'd have to wait, maybe a V1, V2 entry here at the 20-day, or a close below, close back above the 200, or some kind of price action around the 200 for a better entry. But right now, I just feel like it's too high. AGQ is double leveraged silver. It's come down here to this third ATR channels. That's 3 standard deviations away from the mean. To V1, you can see how this bar went below here. Not quite a V1. It would actually, for me, it'd need to close, but I don't see anything there that interests me. Back testing crossover systems for AGQ is the 5 crossing over the 20. So that I might be interested if we have this crossover, but for right now, not interested in any of that. Amgen. Amgen is below. I actually bought Amgen here. I scaled about 55% here. Then it started to move against me. And then when it closed below the 200, I just got out. But all in all, it was still a net profitable trade. I would be looking for another possible entry above going above and closing above the 200-day. That might be interesting, especially now that we have this higher low put in. Well, we don't quite know it's a higher low, but if it held here and then went back up, then I would take it. Because again, these higher lows, the reason, I don't like buying these lower lows that close above, because people that bought here, they have a nice profit. They're going to sell. That causes selling pressure, right? But if it's strong enough to move back above, then those sellers, that selling pressure is gone, and it makes it easier to move up. But right now, nothing on Amgen. All right, Amazon. Boy, I really tried to move down in reverse today. This is a V1. This bar washed out this previous low substantially in reverse, but in the context of the chart, I don't like it. Just too high. I'll buy to 60, 62, maybe 65 sometimes, but this is just a little bit too high for me. Boeing. Well, Boeing had a nice bounce off of the 100-day moving average, this red line with the V2, which was good. Kind of a one-day wonder. Now it's come back. It's holding in this halfway range. But I feel like in order to buy Boeing, it has some more work to do. It has to settle down. Interestingly enough, this is a good example of a nice double bottom divergence here. You see we have this low here, we have this low here. See how deep these MACD bars are? See how deep they are? And then you see how we get down here almost to the low. I mean, in general terms, as a test of this low, but you see how small, how narrow these bars are, how shallow these bars are compared to here. That's a double bottom with a bullish divergence. That is what Dr. Alexander Elder teaches. He feels like it's one of the strongest technical indicators in the market. And I agree. I think it is good. So, look at these lows, how deep we are here on the momentum. Here we come down, test that low, very shallow, then we move up. So right here, if we went down another couple days, then move back up on a V1, V2 and a higher low, that would interest me. But as it is right now, no. Oh boy, Alibaba. It's a big down day. So nothing really I would like to buy there. Generally, I don't like to buy in front of large range bars. You see the distance from here to here, or from here to here. That's one ATR. That's one average true range. That's based upon the movement of these last bars. You would expect a range. You would expect a move about this large, but you can see this bar is clearly larger than one average true range, which means it's outside of noise. It's stronger than noise, which means there's a lot of selling and a lot of distribution. So in order for me to be interested, I mean, not that I wouldn't be interested around to buy some kind of V1, V2 buy back up, if it works out that way. I don't like, regardless of how good this signal is, I don't like to buy in front of these big, having these right behind me, because a lot of people sold there, meaning it's going to be hard to probably reverse and get back up there. Not impossible, but the tendency is it's going to be difficult. Like here's a large range bar here. This attempted, failed. Now we had a larger range bar than one ATR to the upside. So nothing on Alibaba right now. Caterpillar, well, it broke out of this range and failed, so yeah, nothing I want to buy there either. This bar is larger than one ATR, tested this previous range, broke out and failed, so that's a false breakout, so nothing there. Canopy Growth, well, I might be interested in buying Canopy Growth if we were to get down to this 200-day moving average, test this 200-day moving average, close below and go back up. If we did, we'd be in a low RSI range. We'd also, down here to the third ATR channel would be great. I think about 80% of all price action stays within the positive third ATR channel and the negative third. So, if we got down here, also had a low RSI, also rejected the 200-day, closed back above, I might be interested in that. But as is right now, not interested. Dexcom, it's moving sideways. It's building a base. That's always positive. MACD went positive. RSI is still under 50. Ideally, having this come up to the 200-day, closing above, then closing below, making a higher low, and then moving up is something that I'd be looking at. So, this is a V1 right here. This bar went lower than this bar, reversed back up. So it's possible, but we are in a downtrend. We are in a downtrend. We don't have a double bottom behind us, which I don't like. So, it's important to be patient. The biggest advantage that any individual trader has is being able to be patient. We don't have to buy and we don't have to sell. I think Warren Buffett said there's no 3 strikes rule in the market, which is true. You can stand there and wait for the perfect pitch before you swing, and that's our largest advantage over the large financial companies, that have professional trading floors and so forth. They have to buy. We don't have to buy. So, let's use that to our advantage and only trade when we get a setup. Excuse me. All right. eBay. Well, this obviously was larger than 1 ATR, right? So that means there was a lot of selling pressure, and we had attempted rally, almost right back to the halfway of here. So there's really nothing here that I'm interested in. That was a big sell-off on big volume. It's going to be very difficult to get back up there. It's underneath the 50. We have earnings coming up, so maybe that will change the sentiment for this stock, but right now I would not touch that. All right. Give me 1 second. Okay. This is the 3 times energy. It's very choppy. No crossovers at the moment. We had this big reversal bar here on large volume. I don't like that. Nothing there. Okay. Etsy. Well, we had this big bar down, larger than 1 ATR on large volume. There's a tendency whenever you have a large down bar like this for the next day, not necessarily the next day, but sometimes the next day, sometime in the future, for it to come back and test that halfway mark, which is exactly where it did, exactly what it did, and this is exactly where it found resistance. So I certainly would not be interested in this. If this could settle down, if the bars could narrow, move sideways, attempt to go down below the 50-day and then reverse on strong volume, maybe V1, V2, I would then possibly use that and then use the 50 as my line in the sand or my initial stop. But right now, no. Facebook, looks like it's broken out again, but we're at 69 RSI. Stocks have a tendency to stall at the 70 RSI where they become overbought. So you have a confluence of a lot of things going on here. You have close to a 70 RSI. It's at the same time as the third ATR channel. I'm not saying it's going to go down, but I would say the tendency is that this would be near a short-term top. Not that it's going to go crashing down, but possibly it's going to move sideways, maybe pull back into value. If we move back down into here, back into the value zone between the 1 ATR channel, the +1 ATR channel, and the -1 ATR channel, somewhere down in here, and then had some nice price action like a V1, V2 reversing back up, I might consider buying that. But right here on Facebook, at this particular moment, I wouldn't buy. 5 below is a monster. Look at that. Look at that. 68.84, but same thing. RSI is 70R, close to a 70 RSI at 68.84. We're moving up higher. See how we had this big move of volume here on this big move? That's good, but you see how we're going higher and higher on lower and lower volume? To me, that is a bearish sign. There's not as many people buying up here. So, maybe a pullback back to the 50, pull back to the 20, somewhere in that range. It might find some support here because that was the previous resistance that it broke out of. And whenever you have a previous resistance that you break out of, then that becomes support. But I would rather take a deeper dip on this, but we'll see what happens. But as of right now, I'm not going to do anything with that. Gold. I'm sorry. This is the Swiss franc. It's down in its third ATR channel. There's a chance it would hold down here. I'd like it better if there was a double bottom with the bullish divergence. So I'm not going to do anything with that in there. Gold. Yeah. Gold gapped down quite a bit. Reversed back over the 100-day moving average. Little bit of a bullish divergence here, although this didn't quite get to that low. But you see how we had a low here, we rallied, we come back. See how deep the red bars are here, and you see how we're kind of back in this range with the bars. The red MACD bars are more shallow here. If you wanted to take an aggressive trade, buying right here and then using a close below the 100 in the coming days, might be a trade that I would consider, but I'm going to be picky and wait for a better setup. A good crossover system for gold is the 5-day crossing back over the 5-day EMA crossing back over the 20-day EMA. And when you have a moving average crossovers, you have two confirmations of trend. A shorter term crossing back over a longer term moving average, so it keeps you out of the noise. But yeah, that's a tough one. But I'm not going to buy it because see how we're at 42.75. Even if it does continue to move up, likely it's only going to continue to move up to the 50 RSI, because when you're under the 50 and go back over, when you're under the 50, you're going to find resistance when you get back to the 50. Some of the time, not all the time, but a tendency. So, okay, Google. Well, Google, we talked about fractals. This is a fractal, 2 below, using this high 2 below, and these are also 2 below. And we moved back above. It's 64.54 RSI. It's not bad, but it's 64 RSI. It's a little too high for me. Goldman Sachs, boy oh boy, this is a good example of why you do not want to buy into earnings. A lot of people bought into earnings. Earnings was this morning. They bought when it was above the 200-day, and they got rewarded with a 3.44% loss. So that's why I do not buy into, or I do buy into before earnings, but I get out before they actually announce it. So I might be interested if the bars would settle down here, narrow, form a V1, V2 for a swing back up. But as it is right now, definitely not. This bar is much larger than 1 ATR. It looks like it's here, but it actually closed up here Friday. So this bar is actually this long. So two ATRs or more, and look at the volume. So not interested in Goldman Sachs. All right, HCA. Well, it lost the 200-day moving average, which is not healthy. Right here, when it closed below the 200-day and then moved back above, that was a good entry. As a matter of fact, I bought this back here, and I bought this here. So yeah, I had two nice trades on HCA, and you can see the reason I bought. Well, I bought here because we had this strong move and closed back above the 200. I didn't love it because it wasn't a higher low, it was a lower low. But over here, I like this one better because, the people that bought here, sold here, was able to come down here, close back above. So the sellers that bought here, they sold here. Those sellers are out of the equation, making it easier to move up. And so, I phased on the way up here, but now we're making a lower low again. This is a tough one. Yeah, I don't think I'd be messing with this. Close back above the 200 I would consider, but it's a lower low. So even if I took that, it probably would be a half position. If it's a higher low, I always go with the full position. But if it's a lower low, I tend to want to go with a half position, be conservative. All righty. Biotech. I did buy biotech here when we closed above the 200. I scaled out here, and I believe I exited the rest here. Glad I did. If these bars were to move sideways, narrow a little bit, and then have a nice big move, clean break back above the 200, I would consider it. But as of now, nothing to buy. Intel. It's hanging in there. It's a 66, 67 RSI. It's too high. No moving crossovers. We're near the third ATR channel. Just not a good risk to reward ratio here. All right, IWM we have, as we mentioned at the beginning, it is holding support at that 5-day. I did buy it here, scaled out here, so we'll just have to see what happens with that. I don't like that it's be closing under this previous high, but on the flip side, it is holding the 5-day moving average, which is good. So we'll just have to see how this one ends up. It's positive that we broke back above the 50-day moving average. But we are at a 49.44 RSI, which, it looks like it got right to 50 RSI and got rejected. But I wouldn't buy this regardless because it looks like we have earnings tomorrow. But, this is positive that we closed below the 50-day, now back above the 50-day. I see Dr. Jorgensen going to hold it. What you talking about there, Bruce? We talking about the Russell? So anyway, so on Johnson & Johnson, I would not buy this because of earnings. If there was not earnings, would I buy it? If I did, I would use the 50-day as my stop, and I would certainly take a half position because this is a lower low from here. So people that bought down here, they're going to be tempted to sell when it gets up here. I would rather it come up here for a couple days, come back down, close below, make a higher low, then go back up. All right, so Coca-Cola, we have that. Did buy here when we had this higher low close back above the 200, scaled here and here, scaled here and scaled here. So that's worked out nicely, hit that profit target today. So this one is fine, it's intact, it's not too high, so we'll see what happens at the end of the day. All right, Lockheed Martin, did buy this here, it's moved up nicely, is holding halfway of that bar. So I am going to hold that. Let's see what else we have. MasterCard, 66 RSI, just in general. It's too high. Just in general, there's no new crossovers, anything like that. So, okay, Altria. Well, this was a nice close below, close back above the 200-day moving average, and that certainly was a good trade. I didn't take that trade. I already had some options in Philip Morris, so I didn't want to have too much in that space. So yeah, but this is this is positive. If I were to be looking at this, I would look for a pullback here, a test of the 10 or the 20 with the V1 to trigger me back to the long side. So nothing on Altria. You know, Merck is kind of interesting here for several reasons. We're at a 32 RSI. We're at the third ATR channel. When a lot of times stocks will find some support at the 30 RSI. There's 30 RSI buyers that will come in there. I would rather have some kind of V1, V2 to the upside. But let me show you this. Dr. Elder teaches what he's called the triple screen system, and it uses 3 time frames. We trade off the daily, so there's the weekly and the monthly. So I would look at the monthly chart here. You see how this is obviously in an uptrend? It's obviously in an uptrend, right? No doubt. Now, do you see how even though the largest time frame is an uptrend, the median time frame, which is the weekly, see how the weekly has now come back down into value? And what I mean by value, it's come down between the 1 ATR channel and the negative 1 ATR channel. So that's 1 standard deviation away from the mean. So this is positive. We have in the largest time frame, we have an up move, clear uptrend. Weekly, we're coming back down into value. It's just a retracement of the move, which is totally fine. It's totally natural. But so now, because the monthly isn't an uptrend clear, the weekly has come back down into the value zone in the intermediate term time frame. Now the daily, I would be looking to get into a daily trade to the upside to get a little head start on this going back up. Not saying that it will, but possibility. So, we lost the 50 on the daily, which is not positive, but we are at 32 RSI and we are at the third ATR channel. I'm not going to buy this today, but if we close below the 30 tomorrow and then close back above, I would take a stab at it. Or if we close below the 100-day moving average and then close back above, as long as we're still over 30 RSI, I would definitely take a position there. When you have a confluence of a 30 RSI and the 100-day moving average, that has a nice tendency to be a very good risk to reward ratio. If it got down here tomorrow and it was a 30 RSI and was right here at the 100-day moving average, the next day if it closed below, I'm out for a very small loss, even if it's down here for a small loss. But if it moves back up, I have a very good risk to reward ratio back to the upside. So I'm going to keep looking at Merck for not now. Somebody could buy this at a 32, and if it closed below the 30 to get out, but I don't like it. I like to be patient, and I like to have things line up, and a close below down here or a closer to a 30, which would give me a better 30 RSI, would give me a better risk to reward ratio. Yes, MACD is negative, certainly. But whenever you have a, when you're looking for a large dip buy, and a 30 RSI at the 100-day is certainly a major dip buy, you're always going to have a MACD negative at that point. It's very rare to have a 30 RSI after a large move down and have the MACD positive. Because clearly we're in a downtrend, but this type of trade, we're looking for a dip. We're looking for a large dip at a low RSI up against a long-term moving average. So yeah, the 100-day 30 RSI combination is really what I'm going to be looking for. Microsoft. 69.55 RSI. It's just too high. Woo. Netflix got really beat up. I think that was because of the Disney deal. Let's take a look here. Excuse me for a second. Let's take a look. Sorry, I have to look at some of my other screens, so forgive me. So, Netflix. Bars are too large. They're larger than 1 ATR. Lots of volume, lots of selling off here. We have earnings coming up, so that one's just off the table. Nike, we have this position, bought it here. It's moved up, took a little profit. Oh, excuse me for 1 second. Speaking of profit, I have to make one quick trade here. An account that I manage. Okay. Just gives me 1 second. We'll get back to it. All right, that is taken care of. And then okay, yep. Hang with me, hang with me. Okay. Hang with me, please. All right. Okay. Speaking of profits, I had to take a phase out on an account that I manage. Okay, so we talked about Coca-Cola before, but it's fine. It's moving fine. Lockheed Martin. Oh, sorry. All right, Nike we talked about. Philip Morris is up today. I actually sold a put on Philip Morris down to here. So as long as it does not close down below here before Friday, I'll be able to keep all the premium, although we have earnings on Friday. So I will have to exit the position before that anyway, but the put is in the money nicely. All right, what else do we have here? All right, PayPal. Yep, PayPal is certainly in a nice uptrend, but it's too high, 68.91. A lot of these techs are just too high. I need some kind of pullback, possibly back into the value zone, maybe V1, V2 entry back to the long side here at the 20-day, or at the -1 ATR, or at the 15. So, all right. QLD, that's the double leverage QQQ. Nothing there, looking for a dip back below the 200, and then a close back above, or some kind of moving average crossover, which we don't have here. Square, boy, Square's certainly moving sideways. If we close down below the 200, then back over, I would consider that, depending on what the price action is, or a 520 cross, a 5 EMA, 20 EMA cross back over. But you can see the 5 days, 74.91, 75.19. So, this is moving sideways. And when stocks move sideways, they consolidate. It's like winding up a watch, meaning that it's going to probably spring. It'll have a tendency to spring one way or the other, up or down. Now, we don't know when it's going to happen, but you just have to wait patiently and wait for the signal. But yeah, we're moving sideways. So this is probably going to move strongly one way or the other, but we just don't know when. So there's no trade here today. SSO's double leverage S&P. Nothing there. TLT. Yeah, nothing here. Maybe back at the 50. You see how it respected the 50 last time. So maybe down here we get a V1, V2 trigger back up. I might consider buying that there, but not now. Tesla. I may consider buying that tomorrow if we were to get a V2 back above. This would be, well, nah. Now we have earnings too. Yeah, nothing on Tesla. I need some kind of price action that kind of shows me that the sellers are gone. I mean, this did in a way, because we sold all the way down here and reversed back up, but we're at 4150 RSI. The 50 RSI would probably be some resistance. So just not clear enough. Conflicting signals here. Natural gas broke down to a new low there today. Its recent low. Boy. Yeah, so nothing there. No double bottom, no divergence. It's a double bottom. I mean, well, lower low. Didn't test and go back up, but there's nothing here. United Healthcare. Whew. Big bar. You can see how we reversed today, but close to this halfway mark. We have earnings, looks like tomorrow. So this one is verboten. Nothing we can really do with that one. Oil down a bit today. I would be looking for a test of the 200 again. Maybe you close below, close back above. But as is right now, nothing. Okay. Dollar moving sideways. I like how this has moved up, moved down. We're in the value zone, moving sideways, but I would need this for the price to go down, try to go down, get rejected, find no more sellers, and move back up. That would be a good entry on this, but we need that to happen first. Visa. It's moving nicely, but it's a 71 RSI. VIX, VIX now we're down here at 31 RSI at the third ATR channel. It's getting kind of interesting. I'd like to see a move down, move back up to show that we have a bottom put in, but we do have a convergence of the third ATR channel and the 31 RSI, so that is interesting. Verizon moving sideways. That thing's going to move eventually. We don't know when or where, but earnings will probably be the key, but nothing there. Energy close back below the 200. If it closed back above the 200, I might consider buying that, but nothing there today. Real estate. Yeah, it's just moving sideways. 60 RSI. You see how we've moved up and up and up and up and up, but the MACD has not continued to move up with the price. Do you see how up here we made a higher high than over here, but do you see how the RSI, based upon that previous high RSI reading, is lower? I've been bearish on this for a while, and I'm just really kind of waiting for some kind of signal. So I'm not going to take it there, but in big picture, this looks toppy to me. Healthcare. Yeah, we did bounce off the 200. Big large bars. I'd rather see this close below and then close back above. So yeah, I'm not going to touch this because of this large bar here. If we were at a 30 RSI, something like that, I would consider it. But as we are right now, I'm not going to take that. And then transportation. Well, transportation did have a good move when it finally broke above the 200, but this This is a lower high than the previous bar, lower low than previous bar. Is going to close below the low, back in the third ATR channel. So all in all here, nothing. So that leaves 0 candidates for today. I don't see anything at all that I'm interested in. So let's take a look at our current positions. Let's see what we want to do. So IWM, the 5-day is at 156.94. Yeah, if it closes below 156.94, I think I am going to exit that position. I think that's going to be the call. 156.94. So that's probably going to be last minute. Coca-Cola is fine. It's made a higher high. 5 days down there. That one's fine. LMT, if it were to close lower than halfway of this right here, I would consider it. Just locking in that profit. We'll have to take a look at that. Let's see, that's 307.70. LMT equals 307.70. So I'm going to watch that line at the close. Nike looks fine. Let's see what the market's doing right now. Yeah, so the Dow Jones is down 44, Nasdaq's down 14, and the SPY's down 4. So, you know, I do like that Coke and Nike are both up, even though the market's down, giving some good relative strength. So that one looks fine. SPY, with my buy at the close, sell at the open, I will be buying this near the close of the market. And Philip Morris, we have a put on. Looks like VIX. Yeah. Looks like VIX has moved up here. We'll have to see how that closes. So yeah, not one thing to buy. Interesting. Interesting. It's probably one of the few days that I haven't had anything, any potential setups. You know, the only potential setup that I would consider here is Merck. But I'm going to be patient with it and see if let's see what Bruce says. Bruce, what are your thoughts on Merck here? Okay, maybe he stepped away from his computer. So anyway, let's be patient with that. See if we can get triggered in, and see if we can get down here to this 100. That would be a nice entry to a good risk reward spot right there. All right, so we have 5 minutes. So let's look at the Dow. Let's look at the averages. You know, we moved up, we came down, we had this dip, we moved back up, but now we've kind of failed. You know, I mean, we've kind of stalled right here. So, you know, move back above here would be a good sign if we could continue to move higher. Although it would happen up here in this large, I mean, in this third ATR range. So, you know, there's a tendency for it to stall out here. It doesn't mean it always does. You know, and some people will say, hey, you know, this one went. Well, in poker, you know, you can play pocket twos, and sometimes they win, right? But you know, if you play a lot of poker, that generally they have a tendency not to win. And when we get up into this range right here, generally it stops. The tendency is to stop. So I don't like buying up in this range. And sometimes it goes and takes off, and hey, good for that, good for them. But so the Qs, so the NASDAQ has moved back slightly positive, nothing too big. SPY, I'll be buying this at the end of the day here in a few minutes. This is a 39-minute bar, so it has moved back above the short-term moving averages, which is good. So 5 minutes to go. This is gold intraday. Yeah. Yeah, did test that 100, but yeah, I'm gonna be patient. So let's zip through one more time. 157.03. My stop is at 156.94. So that one's gonna be close. Yep, SPY did open positive today, Bruce. So that's awesome. Puts a little more green in our column. Speaking of green, okay, I am up today, so that's good. Not too much, but it is a positive day. Okay, so one we really have to watch is LTM, or IWM, excuse me. Lockheed Martin's fine. Nike's fine. SPY. So I'm going to just go ahead and place my orders on SPY right now. Get that out of the way.
Order filled.
All right, there's one. And over here in this other account, SPY. All right, that's taken care of. Now I'm going to have to queue up IWM. We have 2 minutes. Sorry that I'm having to make these trades here, and I have to stop talking just so I can make sure I do all these correctly. Okay, so really what we're looking at is the IWM at 156.94. So we're close. We're close. But it is hanging. So we have 1 minute left. Lockheed Martin's fine, Nike's fine. SPY I bought, Coca-Cola's fine. IWM 156.94 is our stop, is our close. So as of right now it looks fine, but you know what can happen in that last 20, 15, 10 seconds. It can go pretty crazy, so looks like it's holding. Now if you look at the 5-day, it's moved to 157. So that's now going to be our stop. And it closed above. So we kept it, which is good. So, all right. We had a positive day. We were in the green. Okay. So good. Not a huge day, but a positive day. All right. So this one is in the books. Is there anyone that has any questions or would like to look at any questions about what we did today, or would like me to look at any charts? Just let me know. It's a new channel, so we don't have a lot of people tuned in yet. Hopefully in the future we'll have more and more. And maybe this is a good time to say, if you've learned something today or found something of value, consider subscribing to the channel or sharing this on social media, and let's try to get the word out and help people trade better. So let me know if there's anyone out there. If you have any questions, type it in the chat. All right, so it doesn't look like we have any questions today. Maybe we'll have some tomorrow. So anyway, hey, listen, I appreciate everyone tuning in. And I do want to mention that I do offer one-on-one coaching sessions via Skype at nighttime. So if that's of interest to you, my hourly rate is in the description section below, and my contact information is in the About section of this YouTube channel. So anyway, thanks again so much. I appreciate you tuning in. And on the way out here, I'm going to have to play the U.S. government required legal disclaimer. So anyway, thanks again, and I hope that you tune in tomorrow, and we'll talk to everyone later. Have a good day.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation, and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.